Unlocking cash flow, maximizing the income of your real estate asset. This is the secret sauce. This is going to be a fun video. This is the fun stuff. This is the exciting stuff for me that makes the investment perform much, much better. If you're working with an operator or an active partner as a passive partner or as a partner in the real estate deal, one of the best things that an active partner can do is properly manage and take an underperforming asset and create it and change it and improve it into an overperforming asset to generate great returns, steady cash flow, and get you your money back and then some. So let's get into how to maximize cash flow for your multifamily real estate property. So let's start with the two ways that you can generate more income for your real estate property. Multifamily property, you want to do one of two things. You want to add new income streams that don't already exist, or you want to improve underperforming income streams. Let's get into those real quick. Alrighty, ladies and gentlemen, two core concepts here, and then I'm just gonna bang out a bunch of different ways that you can maximize the performance of your multifamily property. New income streams. Before we even decide to offer on a property, we're deciding, is this a property that it makes sense for us to add new income streams that don't already exist? Is there an opportunity for that? How can we account for that in our underwriting? What does that mean when we're doing our due diligence, when we're negotiating and going through the conditional period, right? Very common ways to add new income to your multifamily property. We're gonna go parking. Another one, storage, right? Laundry. These are very common ways. Parking, add more parking or improve the parking, charge extra for parking. Storage, add new storage that doesn't already exist, or actually utilize storage space that's there, separate it, frame it up, put locks on it, give your tenants access to it in exchange for additional fee. Next up, laundry. Is laundry pay per use? Is there an opportunity for you to put it in their units in exchange for higher monthly rental income? Does that make sense? How much is that going to cost? Or does it make sense to just put new units in the lower level and charge them a fee for it? What is going to keep your tenants happy? What is going to generate you more income? What is going to be the most cost effective in order to generate your returns? Take that into consideration. And last but not least, add new units. Is there underutilized space that you can either add new units to? Can I use existing space, or can I create new space on the lot that I can use to install and build new units to increase the rental income that that property generates? We could literally do just on each of these parts, we could do completely separate videos on how to do that, and we might, but these are the most common ways to add new income streams once you close and acquire the property to boost the cash flow, boost the value, and get a juicy refi if that's what you're after. Now, let's go into improving existing. Let's run that real quick. So we're gonna get into improving existing income streams. Here's a few high level, and then we're gonna do a deep dive into multiple other strategies and things that you can do to boost the cash flow for your multifamily property. Quick note, if you are an active investor or you're a general partner, these are your responsibility. Your job is to take an underperforming asset, create it into some badass property you want to hold forever that's printing money every month to generate some income and long-term wealth for you and your partners. For limited partners, you don't got to worry about any of this, but you want to make sure that your partner that is actually going to be able to do this has a plan, has experience, and has a strategy to pull it off, and that it's realistic. Too often do I see other investors out there thinking they're going to turn over all their units within a 6-month or a 12-month window. They're going to double the cash flow. They're going to do all these awesome things when it's not even realistic because of the time and energy and money and lack of control that you have on specific aspects of your real estate investment. So, quick hits, new features, add new features to existing space. Lighting, dishwashers, bathroom renovations, laundry, balconies, additional parking, storage spaces that are already there. Add those features to existing units. Renovate, improve the interior and exterior condition in exchange for more rental income. This is typically done on tenant turnover, but you could offer to renovate or add specific features or update specific features within a unit in exchange for higher monthly rental income. Next up, repairs. Fix stuff that is broken. If you fix stuff that is broken, it will not continue to cause damage and it won't cost you more money in the future. Stay up to date on your repairs and your maintenance. There's lots of little things that the other landlord just didn't want to deal with, didn't know about. figure out what's wrong with the property, figure out all the items in your due diligence, negotiate the contract accordingly, and prepare to do some repairs immediately in order to keep the tenants happy, maintain the condition of the property, and reduce the CapEx that you're going to spend on that property long term. Don't sleep on this. Same with your expenses. There are multiple ways to control and drive your expenses down. If you have experience managing properties, you should be able to save a significant amount of monthly expenses just by managing the property well. Multiple ways to do that. We're going to get into more detail another time, but low flow toilets, low flow fixtures. Another really sneaky one is you can just get rid of the actual spout in the tub because the shower will still fill up the tub. That is just one more thing that's going to get broken, one more thing that can leak, one more thing to fix and repair that you don't necessarily need. And there's lots of little things that you can do just within these sections to improve the cash flow without reducing how happy and convenient the property is to live in for your tenants. So you can easily generate more income to give you and your clients and your partners a better return. Next up, you want to reduce your vacancies. How quickly are you able to turn over units and get a new renter in there that's paying current market rent and that's going to be happy to live there for a very long time? We want to reduce how long it takes, and we want to reduce the overall amount of vacancies. Vacancies will dramatically eat into your cash flow. Avoid vacancies if you can. There's lots of ways to make sure that you're getting units filled as soon as the other tenants are moving out. We could, again, do a whole video on that. But now we're going to go through a laundry list of ways that you can improve cash flow on your multifamily property. Alrighty, before we keep going, if you guys are enjoying the video, drop a quick like. If you have experience or you have specific questions on things you can and can't do, what may or may not work when you're trying to improve the cash flow for your existing property, hit us in the comments or send me an email. Email directly from myself is in the description. Be happy to answer any questions, or if you have suggestions, we're always here to learn. Now, next up, rent optimization. If you are investing in a market where you do not know what the market rents are, especially for that class of building, that profile of tenant, and yes, you do need to understand the profile of tenant, you do need to understand the current market conditions for that local economy and the broad economy, and you do also need to understand what realistic rents are for your location, your features, and the condition, as well as the time of year. Yes, rents can fluctuate with time of year here in Canada, but understanding what optimum rents for the current condition and what would be the rents if you were to improve or add features to those units. Connect with brokers, connect with other real estate investors, connect with property managers. Those are great resources for that information. Next up, energy efficiencies. You will have to carry some expenses for the utilities of the property, probably. So make sure you guys are installing energy efficient so you're using less gas, less water, and less electricity. LED lights, low flow water fixtures, efficient boilers and forced air furnaces, heating systems, right? There are a lot of things that you can do to make sure that you have quality efficient mechanical systems that are going to reduce your utilities expenses, among other things. There is literally a million things we could talk about energy efficiencies and how it relates to even financing requirements. Hello, MLI Select, we see you. Next up, systematic checks. Much easier for you to manage the property and the expenses and improve the income if you know what the heck is going on at the property. What is the physical condition of the units, of the common areas, of the basements, of the interiors, of the exteriors, of the roof, of the windows, of the driveway, of the grading of the land around it? Like, guys, systematic checks, so everything is checked at least quarterly by somebody that knows what they're doing, that you trust, that can properly analyze and communicate what is changing in the condition of the property. This will reduce the amount of CapEx because you're able to get in front of problems or outright avoid them, which will reduce your expenses and boost your income. We like that. All right, tenant management. There's a million things we could do to get into this in detail, and we will post another video specifically on managing tenants, but the tenants are your business. You need tenants to live in your properties, to pay you rent on time in order to meet your debt obligations and in order to make cash flow and in order to return money to yourself and your partners and in order to build wealth. You need tenants to pay the bills, ladies and gentlemen. Do not forget that. Clearly communicate to your tenants, set expectations, be fair but be professional, and understand the profile of people that are going to be interested and already living in your building so you can better understand how to communicate and work with them. If you start creating an environment where you're working against your tenants, it is going to be much more difficult to get what they want and to get what you want, and it's going to be an awful experience. Believe me, tenants can make or break the success of your investment. Be professional, understand the rules, and make sure that you communicate clearly. You gotta do that, no questions asked. Next up, property management. If you're not gonna do it, hire a pro that knows how to do this. We are involved with the property management because we have experience and we do it very, very well. It is one of the secret sauces that allows us to make our investments successful and profitable for us and our partners. But if you're not going to do it, hire a professional property manager that has experience in that city with that profile tenant, with that type of building, and has a clear plan to execute on what your investment strategy is for that specific asset. Next up, financing optimization. Listen, the financing environment is changing in Canada right now, literally almost every month. And it's going to continue to evolve and change. Depending on the building, depending on what you've done with the rental income, you may be able to go back and get more preferential financing from your existing lender or other sources of financing for that type of real estate asset. Do not sleep on the power of exploring multiple financing options on acquisition, during stabilization, and after the exit into long-term hold. There are lots of options, and we will talk a lot more on that. We already have a video on your financing options and the basics for acquisition, but to take a deeper dive on financing, talk to mortgage professionals, talk to other real estate investors, and hit us up in the comments and in the DMs to ask us questions or confirm some of your ideas for the types of assets that you guys are looking at acquiring, or even ones you're already managing, because there may be equity, there may be better rates, there may be better terms that will dramatically improve the income and the returns that you'll generate from your multifamily property. Financing's huge. In summary, there are two main ways to maximize or start to maximize the cash flow for your real estate investment. Number one, add new income streams to the existing property. We love this strategy. Number two is improve underperforming income streams as well. There's a lot of obvious, but a lot of not so obvious ways that you can do this in order to manage the property, keep the tenants happy, or find the right tenants that are going to be paying optimum rent. That'll increase the income you're bringing in, increase the cash flow, increase how quickly you can actually pay back all the money, or even overperform what your initial perspective and goals were for that specific property. Now, there's a million different ways to manage a property. Specifically, you just need to understand that you want to improve and maximize the amount of rental income on the property in order to make sure the asset performs as best as it can. If you have questions, concerns, or you want to know how we do this with our partners in order to maximize our returns and honestly, the performance of our real estate assets, send us a message directly via email. And if you like the video, we'd love a like and a little bit of support. So we appreciate you guys checking it out. Thanks for watching the video. We'll see you on the next one.